presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Tampa. Hey, Al, what's going on?
Oh, it's a beautiful thing. I mean, if your listeners don't get the gold report, they're missing out. I mean, with your gold report, you just printing money. I love it.
You're my best dad out there, Al. Let's go to Jeff in New Jersey. Hey, Jeff, what's going on?
Great. Hey, listen, I was calling to thank you. A few weeks ago, you were prompting on your show to fill out that $10,000 grant.
Yes.
So I filled it out, and just a couple days ago, I found $1,000 in my business checking account.
That's awesome, man. That's awesome. Yeah.
And I owe it to you, because if it wasn't for your prompting, I would have just assumed, no way I would have gotten anything. So I wanted to thank you.
No, we appreciate you growling. No problem with us here.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup filling in for Tom O'Brien. This is the Tom O'Brien Show. First things first, I want to talk about before we get into what's going on in the market and some stories. Go over to TFNN.com here. Okay, so Larry's been resting for the past few days. He had some issues with his voice. However, tomorrow I called him, and tomorrow he is good to go. We're doing the live trading Fridays again with Larry Pesavento. So if you haven't done one of these yet, this is awesome. Okay, so it starts at 9 Eastern time, runs until noon, and it's just Larry trading. And it is really cool to kind of see what he does. The newsletters are phenomenal because you're getting this kind of constant insight. But it's another thing to really watch, some of our traders actually trade, which I think is really awesome. You go ahead and here. So we do this the second and fourth Friday of every month. This is going to be the fourth Friday of this month. So you're going to wait to the second Friday of July. If you get it today, you go in here and we're doing it. If this is your first month, you can go type in Larry June 24 right here in the promo code area. If you already have an account, just go ahead and click the log in here. But yeah, that's going to give you $50 off your first month. And if you need any help with that, you can go ahead and email me at jacob@tfnn.com. Let's go see what we're looking at today. Well, in the E-mini, we're kind of flat right now, off about 0.08%. And the SPY, we are totally flat right now as well. The Russell futures up about 0.56%. NQs up about 0.18%. And the Dow futures down slightly. And then the total DJI, we are sideways right now, a little bit to the downside at 0.06%. Gold having a somewhat positive day, which was nice after a few days of downward movement, trading at 2,337. We will be having Tim Ord of the Ord Oracle on, and I know a lot of you guys really enjoy his metal analysis on top of his market analysis as well. Silver sideways right now. Yeah. Just kind of a sideways day with it. Crude oil up a little bit, 81.83, which is fantastic. Let's see what else we got going on. DXY still up in its higher trading range. So we did breach that 106 briefly and came right back down. We are, anticipating a test of like a higher level, about 107. Definitely brings some pressure into the market as well, selling wise. Let's take a look at Micron. So, again, big on the AI hype, okay? I think this gives you a little insight into what could happen if... So, they did have good quarterlies, but their forward guidance was just in line, right? This caused kind of a sell-off a little bit with it. And, I mean, this is 5.6%. And I think kind of the idea is like, well, if they're not expecting any kind of accelerated growth or anything, and it's kind of in line with traditional estimates... why invest in this? Why not go try something else? I think there's a little bit of that as well. But, with this massive move we've been seeing, investing in this, chip stocks and really AI, if you get any, 1 or 2 quarters that aren't going to be as rosy, I'm interested to see what that sell-off might be like, because I believe it will happen as well. People want to take profits, and then we'll wait to see for a big setup. So let's look at this a little bit. Earned an adjusted 62 cents a share on sales of $6.81 billion. In the quarter ended May 30th. There was an analyst poll. They were saying that they were expected to earn 48 cents a share. So again, like this was a decent quarter for them, right? This is on sales of 6.67, so that was expected, and they had 6.81. And the year earlier, Micron lost an adjusted $143 a share on sales of $3.75 billion, and that really, I think, is a nice snapshot to see what this run with the chips and really the AI boom is doing. For the current quarter, Micron predicted adjusted earnings of $1.08 a share on sales of $7.6 billion. Analysts were modeling earnings of $1.02 a share on sales of $7.59 billion in the fiscal fourth quarter. In the same quarter last year, Micron lost an adjusted. So, I mean, this is pretty nuts, right? Robust AI demand and strong execution enabled Micron to drive 70% sequential revenue growth, exceeding guidance range in Q3. So Micron tumbled more than 5% to 135 during the regular session on Wednesday. Micron stock climbed 0.9%, closed at 142.36. And yeah, it's just because they didn't have like super stellar guidance going forward. Not that it was going to be bad or anything. I mean, they're still growing, but it's just not anything that was impressed Wall Street, essentially, right? And this may be setting up, too, for kind of like an overreaction, right? Where you might settle up really like down about, 2% or 3% as opposed to, 5.5%. So it'll be interesting to take a look at with that. One of the things I want to talk about, too, which is kind of interesting. Give me a second to pull up my stock here. So first things first, we've spoken a little bit on here about the massive data centers and everything, and this is really what this drive in the chip sectors is going to fuel, right? And how we're not producing enough energy, okay? This is going to get kind of weird, but follow with me on it, okay? So first things first, U.S. energy production exceeded consumption by a record amount in 2023, which is actually kind of cool. And so that shows us getting to a point where we're able to produce. I mean, we're still producing more, right? And consumption is just kind of ticking off a little bit from here. But, one of the things we've spoken about, too, is some of these large companies like Microsoft, for instance, hiring nuclear czars to try to figure out how to make local nuclear reactors to kind of power these big data centers. And one of the things they came across is something really fascinating. That in about 20 years from now is what some of these researchers are saying, but they're going to use something called brain organoids for computation. So a lot of computation is done, with silicon, and the argument is that what our brains are made out of do a far better job of handling data and transmitting it than silicon. And this is nuts. I'm going to go ahead and pull this over here. This is from nature.com. It's sad. You can only get the abstract for a lot of these. Unless you work for an institution or you want to shell out, whatever, like $100. So I'm going to go through this. Brain-inspired computing hardware aims to emulate the structure and working principles of the brain and could be used to address current limitations in artificial intelligence technologies. So not only because of the computation, right, restrictions on silicon, but also the energy requirement, right? I mean, these are the same cells that our brains are, right? You get a stem cell and you add a growth factor for brains, and you get this weird little matrix of brain cells, and you've got to feed it like nutrients, but it's not as energy taxing as something like massive data centers are. Anyways, stay tuned, folks. We will be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Before we went to the break, we're talking a little bit about Micron. Their forward guidance isn't anything spectacular, so this kind of led off to about a 5.5% decrease in the price of the stock. And then we're talking about potential future going forward, really for AI and computation in general, which would be through these things called brain organoids. Long story short, it's pretty interesting. Scientists can take stem cells and inject it with certain growth factors. So when you're forming as a baby, the body's able to release certain kind of, I suppose they're like probably amino acids or something like that, or proteins that make your organs form, right? So they figured out how to do this, and they're making these little matrices that are able to basically compute. They had it play Doom, which was kind of strange, and Pong as well. But this is where we branch into kind of these discussions of ethics in science, right? With AI, I mean it's a machine, right? It's kind of hard to infringe on the rights of a machine, and that's not really outlined. But this gets a little closer to home, right? Because the way that they're enforcing certain behaviors, right, in these brain organoids is by applying what they call spatiotemporal electrical stimulation, which really what that means is they're just shocking the thing if it does something that it doesn't like. And you can get into kind of weird stuff with that. And other weird news too, the Japanese are working on a skin analog to put on top of robots. I mean, really, the move is here. I mean, you have AI, right, in the big data centers, and they're going to try to integrate it into all the stuff we use today, such as computers and phones. But I think the future that people really want to push for are these kind of androids, in a sense, right? And so it'll be interesting to see in 20 to 30 years how far this goes if it doesn't get shut down at some point for ethics concerns, which I think it might. Because you're creating something that has pain receptors and utilizing those pain receptors in order to shape up its kind of behavior, which I think is kind of bizarre in a way. I mean, right? Anyways, let's talk a little bit about what's going on with inflation. We have PCE coming out, and I spoke last time that I was on that I don't think we're going to see a time this year where we have interest rates pulled back. The data just doesn't seem like it's there, and I think even the projection from the Fed, GDP-wise, not necessarily CPI, but GDP-wise, didn't see, the range essentially doesn't collapse on 2%, which is their target until something like 2026. More than likely, we get an approach to that level in 2025, and near the end, you can start seeing some major pullbacks. But you have Bowman coming out and saying she's actually, and this was from yesterday, this was in London she was speaking, said that she's still open to raising rates if inflation doesn't improve. So, I mean, that's even a conversation. Now, it seems like Bowman has been a little less dovish, I think, than some of the other people on the Fed, or at least that hold those chairs, rather. But she said Tuesday that the time is not right yet to start lowering rates, because should the incoming data indicate that inflation is moving sustainably towards our 2% goal, it will eventually become appropriate to gradually lower the federal funds rate to prevent monetary policy from becoming overly restrictive. Another thing to keep in mind, too, and I think Tommy had said this as well, is it doesn't seem like the market, when we look at the stock market and just general kind of business, doesn't really need interest rates to come down substantially. I mean, we're still making all-time highs. I mean, we can look at the SPY right now. We reached an all-time high of, 550? We're at 545 right now. This is a SPY. Come down a little bit, but I mean, we're consolidating, right? So we're moving up in a range. There's no doomsday scenario. I mean, we're certainly not hitting any kind of recessionary period right now. I think that there's some components of this economy, meaning people that are experiencing something recessionary in the sense that they're losing money, that their purchasing power is eroding, right? So there's a contraction of their economic economy. But for the purposes of what the Fed looks at, I mean, they're just a component in a broader picture. Again, you can, argue against that sometimes, whether or not that's the right thing to do. But overall, we're still growing. And so the question is, why do we need to bring rates down into capacity? I mean, you have people who have plenty of money who have stuck it, either buying in bonds or money market funds, and they're making money on their capital in that way as well, which will be interesting to see what happens if you kind of loosen, essentially, the kind of floodgates, what happens. I mean, I think people are going to come out with more liquidity in certain sectors of the economy. They're going to come out with more liquidity than they had prior, which I think will be kind of interesting to see. And I'm kind of riffing on that, but it's an interesting idea, and I think there is some validity to that. Anyways, let's keep looking at it. Those comments reflect a prevailing sentiment at the central bank, in which most policymakers have said in recent weeks that they still expect inflation to get back to the Fed's 2% target. While they still expect it, they need more evidence. And again, this is another big thing. If we hit somewhere close to that, even once or twice, it doesn't mean, okay, now it's time to lower rates. I mean, the Fed's not, jonesing to lower rates. They need to see a persistent, pattern. Anyways, I am getting information right now. We look over here. We go to Google, and then you type in the URL right there, ord-oracle.com. Now, every Tuesday and Thursday, our man Tim Ord from the Ord Oracle comes on, and, it goes without saying, if you've listened to these interviews before, that he's an expert technician, and we love having him on. He did some great calls for the market, great calls with the metals as well. Tim Ord, how are you doing today?
Good. Thanks for having me on again. So
absolutely.
Shall we get started?
I think we should. Let me pull up chart one right here.
All right, chart one. This is kind of define kind of where we are. This chart goes back to late 2022, and anyhow, the bottom window is the 5-day average of the trend. Next window up is a 10-day average of the trend. On a 5-day, when the trend's 1.35 or higher, it's bullish. On a 10-day trend's 1.2, and reason. Anyhow, a trend reading, anything above on a closing basis of 1.2 shows there's panic in the market, and panic only forms at one place, and that's at bottoms. So I use a trend. You heard this story before, but I use a trend to show where panic arises. Yes. And so the more days of panic you get, the more worthwhile that bottom is. And so the 5 days is basically 1 week of panic readings. They're pretty high, 1.35. And on 10 days, it's actually 2 weeks of panic. So you got quite a bit of panic for a period of time. So I also look at 21-day trend readings and so on. But the 5 and 10-day are probably the most important. And they pick out worthwhile bottoms that may last a month, maybe two. And anyhow, all that shaded area across that chart are times when the 5-day and 10-day trend both reach bullish territory. And I don't have the date there. The last date I had was April 17th when both trends reach bullish levels. That's right going into that April bottom. And the last time we got these trend readings was on June 17th. Now, the market hasn't done anything yet, but it really puts a floor on the market. So we really haven't pulled back a lot, or pretty much not at all since June 17th. Matter of fact, probably up a little bit. But I hear the music.
Yeah, sorry, Tim. I was yapping for a little bit this segment before I got you on. Stay right there, folks. We'll be right back with Tim Ord of the Ord Oracle.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento on Friday, June 14th and Friday, June 28th this month for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryJune24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, everyone. This is Jacob Shoup filling in for Tom O'Brien. This is the Tom O'Brien Show. We are joined by Tim Ord of the Ord Oracle. Tim, we were just looking at chart 1, talking about the trend. We got cut to break a little bit, so I didn't know if you had anything else you wanted to close with on chart 1 before we move on.
No, I think that's kind of it. It kind of shows you that the market's not really set up for a decline here, according to the 5 and 10-day trend. Okay. So let's on chart 2, let's look at the shorter-term pictures, show what's going on. And,
absolutely, we got it up.
Sometimes, the 5 and 10-day doesn't really give you a good view of what's really going on in the market. But anyhow, on this chart, this is a daily SPY, and over the last, looks like about mid-June, the trend started to get up above 1 point, or actually they got a 1.9 in there a couple of different times. But anyhow, it's close enough to 1.2. It's created, once the trend starts getting above the range of 1.2, it shows panic in that region. And so normally you don't get declines from that level. They usually stay in that level, if not go higher. And if you notice, you're kind of building a base there. The pink area I kind of shaded in, where all the trend readings were at 1.2 or higher, actually 1.1 or 1.19 and higher. And it comes in around 540-ish to 545-ish in that range. So this is area support. So again, panic only forms at bottoms, and we got panic, even though we're sitting at a high here, we got panic right in this level. So declines are probably not likely from here. We're also entering into a seasonality period that's really bullish. It's one of the bullish periods of the year. That's around the July 4th time frame. It's not a perfect seasonality date-wise. Sometimes they start the week before July 4th. Sometimes they start the week after July 4th, the rally does. But July 4th is a week from today. So the market, according to the trend readings here, is probably building a base for the next rally higher. So that's what the trend's kind of saying here. Let's go to chart 3.
All right, getting over here. Okay, I'm going to resize that. We are good to go.
All right. And anyhow, the bottom window is the SPX VIX ratio. And normally the going into a top, actually the VIX starts to rise. And this ratio helps define what's going on. So if the S&Ps are making higher highs and this ratio is making lower highs, then that shows actually the VIX is starting to go up. And VIX is still relatively low right now, but this chart goes back to 2016, and the bottom window shows where the VIX was going down, that's the pink levels, and the S&Ps were still going up. And if you notice, those are all actually intermediate-term type tops. And right now, we got the VIX or the SPX VIX ratio making higher highs, and we got the SPX making higher highs. So intermediate-term wise, it still looks good here. A lot of times the monthly charts, this is a monthly chart, will show a divergence. And I think we're probably going to have a high in July, so that divergence may show up later this month, at least start to show up, but we'll have to wait and see. But the second window up is VIX. It's the monthly VIX close. And normally a VIX below 17, we're coming in around the 12 level right now, 12 to 13 level. And that's usually not where intermediate-term highs form at. That VIX starts to get into the 17 level and higher, and that's time to worry, but the market's probably going into a high. So, July, I think, looks good, at least into mid-month and not late month, but I think some bearish divergence is going to start showing up. But as of right now, they haven't showed up. So if you're long, in my opinion, you stay long right now. And I think there could be a decent rally coming in July. Could it be strong? It could. It's kind of, I think, setting up for it. Probably surprised most people, even though summer is not the best rallies going forward, but a lot of them are pretty good. And I think this one could be pretty good. So we'll have to wait and see. But right now, on a short-term, intermediate-term basis, I guess for the next basically around 30 days, it looks pretty good. So anyhow, that's my assessment of what the market's going to do between now and mid to late July. So
fantastic, yeah.
We can flip the gold market.
Well, let me ask you too before we go to that. What would you be looking at to find or determine there is some bearish divergence? So what is diverging that's going to give you maybe like a bearish indication? So say we hit mid-July and we start getting whatever indicator you're talking about, what would you be looking at roughly?
Well, actually, I don't have this chart shown, but the weekly VIX, SPX VIX ratio on the weekly time frame is starting to diverge here. So that's kind of a warning sign, but it hasn't really showed up on the monthly chart yet. The monthly charts really are the ones you want to pay attention to.
Okay.
So that kind of tells me maybe August is not going to be the best month or something or so. But if I knew that you were going to ask that question, I would have put the weekly VIX up because it's making, even though the SPs are making higher highs, that VIX ratio is making lower highs.
I see.
And it's not as accurate as the monthlies, but still a lot of times you got to pay attention to it. So that's one divergence that was not shown on this chart, but that's one I would kind of monitor, which I am. So if it gets worse, I'll be bringing it up on our shows here. But right now, it's not a bad situation because the monthly's not showing anything yet. So, but that's one of them. And also, a lot of times the trend really gets really low. Like the 5-day will get down to like 0.6 or something like that, and that shows too much exuberance, and that hasn't happened yet either. So you get too much exuberance in the market. A lot of times you'll get a slap in the face.
Absolutely. You get that pullback coming for that. Fantastic. Yeah. Right on.
So
well, we can move to chart.
Forward. Do we got time? Or
give me a second here to check my clock. Yeah, we got about a minute until break, so we can kind of maybe crack into this a little bit before we go to the break and finish it up after that.
Okay. Chart 4 is the daily GDX. That's the top window, and I think just to briefly talk about that a little bit. In my opinion, there's a head and shoulders bottom forming, which you can see I diagrammed there, and we broke through the neckline. I don't have the volume on that, but we did have a sign of strength through the neckline, and we pulled back to the neckline here over the last several days. And I think our neckline is going to find support, which depends how you draw your trend line, comes in around 34-ish. So I think we're at support on GDX right now.
Awesome. Yeah, let's finish this when we get back from the break. Folks, we'll be right back with Tim Ord of the Ord Oracle in just a moment.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. We are joined by Tim Ord of the OrdOracle.com. We were looking at the GDX advanced decline. I was taking a look, Tim, on the break as well. You know, I know this isn't the GDX, but looking at the gold futures. And, you know, we kind of had a consolidation period, and it seems like we broke a little bit to the downside. We tested that last day with any significant volume, which would have been April 12th, and we're kind of trading below that right now. But I'm interested to see what you're looking at least regarding the gold miners.
I mean,
with the GDX, like just what we were talking about before the break with the GDX charts.
Oh, GDX charts. I'm thinking we're at support here, according.
Yeah.
I'm not looking at gold because I'm more interested in the gold stocks. Gold, I think, in a bull market is actually running ahead of the gold stocks right now. I think that's going to change over the next year, and we can cover that another time. But looking at GDX, anyhow, I think we're at a head and shoulders bottom. We rallied through the neckline. We're back at the neckline right now. Over the last couple of days, which is around that 34 range. And the reason why I think that 34 range is going to hold is because of the bottom window. And the bottom window is a 50-day average of the up-down volume. For some reason, this indicator works pretty well for GDX, even better than the next window up, which is advanced decline for GDX on a 50-day average. But both of them right now are above zero. When they're both above zero, the uptrend's intact. When they drop below zero, that's usually when you get the consolidations going. And I shaded in blue all the times has been above zero, and we're actually higher today than yesterday, even though GDX, well, actually GDX is up over 1%, I see, but it's still in a strong position. If we're rallying and this indicator drops below zero, is when you can get in trouble. So everything looks fine. So let's flip to chart 2 and kind of actually look at a little bit shorter term picture of what's kind of where the strength really lies. Let's go to chart 5.
Absolutely. Give me one moment. We have it up.
All right. Chart 5, this is a weekly chart, but this chart is it's a little bit different. The previous chart was the 50-day average, the up-down volume, and the 50-day average of the advanced decline. The second window up from the bottom is a cumulative advanced decline, and or actually it's cumulative up-down volume. The next higher window is a cumulative advanced decline. So it's a little bit different picture you're getting on a cumulative basis, but it still works. It kind of shows you a little bit different pictures. But why I like this chart, if you flip far to the right window, I got a red square there.
Mm-hmm.
And if you notice, top window is GDX, and over the last month and a half, because this is the weekly chart, GDX has basically been consolidating.
Right.
And both those indicators is actually making higher highs. Both the advanced decline and up-down volume cumulative are making higher highs. That's not what tops are made of. So this is an indicator telling you this actually market is getting stronger on a weekly time frame. So that's the reason why I think this pattern that's forming on GDX is actually a head and shoulders bottom, which does have an upside target, I think around 45-ish. So that's about a good 10 points higher than where we are. And this indicator says that we're not topping here at all. This is a consolidation and an uptrend because both those indicators, advanced decline and up-down volume, are still actually going up, even though GDX has actually gone down. So what's to come? I don't know. I think it's another impulse wave higher. It's going to look similar from the previous bottom up to the previous high. I think the previous bottom was around 23 or something on GDX, went to 37, thereabouts. I can't remember the exact, maybe 25.
Yeah, I think 25.67 was the bottom.
The what?
I was saying that you're saying the bottom, around 23. I think it's around 25. But anyways, yeah, I was just putting it in.
Yeah, 25, and I think top was 37. So I think this sideways consolidation or this pullback that we had since 37 high down to current levels is the midpoint of the next move higher. That's what I'm thinking. So we got another 12 points to go, which you do the numbers, you come out with about 45 again, which is basically the projection of the Head and Shoulders top. So when will it start? You know, a lot of times there's July, and July seasonality-wise for gold, either that's a high or low for gold. I think this time it's going to be a low, and a lot of times an October high. So I think for the next 3 months, I think in general this market's going to rally higher. And we can actually look at the bigger picture for gold, again on chart 6.
Pulling it up right now. Got it up?
This is kind of the dominant chart. This is a monthly chart. We've shown this chart before. This chart actually triggered a long-term buy signal back on the May 31st close. You have to wait for the close of the month to really get the signal going. And as long as this chart remains above the mid-Bollinger Bands, which is the bottom window is the up-down volume on the cumulative up-down volume on the monthly time frame. To get the buy signal, you have to close above the mid-Bollinger Band, which it did on May 31st. Next higher window is a cumulative advanced decline, which is the same thing. You have to close above mid-Bollinger Band, which it did. Once these signals are triggered, they usually very seldom whip around. They don't go above that Bollinger Band or fall back down. It's kind of a momentum indicator for the advanced decline and up-down volume. So once you get momentum on a monthly time frame going in a direction, it stays in that direction for months and sometimes years. So we got the signal back on May 31st. So at least at a minimum, it's a multi-month buy signal. And so as long as the bigger trend's up, all the smaller trends will follow suit eventually. So we got support at 34, which is top one of those GDX. We got the previous chart saying you got a bullish divergence going on. So I'm thinking a strong part of the rally is actually still right in front of us. I bet it starts probably in July sometime, and it may end in October just because of the seasonality periods. But I think, so you got, all of July, so it's 3 months. So you got a 12-point rally from, so that's about a 33% move or thereabouts between now and then. So, we'll be talking in October, and I'll be saying, we reached our target of 45. So I won't put that in gold, but there's a lot of analysis, I guess you might say, that projects that move to be to that level, probably in that time frame. So we'll see if that works out or not, but it looks pretty good. And there's a lot of, there's sentiment-wise, there's not really a lot of people talking about the gold market. So, but I think October you probably will, and that'd be the time where the next high may happen. Not a significant high, but some sort of worthwhile high.
Definitely. Yeah, and Tim, listen, I'm going to be on next Tuesday as well, and you're talking a little bit, maybe like last segment or something like that, but talking about how the miners usually kind of lag behind the spot price. I would love to hear some more about that, and I think others would too. Thank you so much for joining us, Tim. This was fantastic as always.
We'll do that. All right. Thanks for having me on.
Take care, Tim. Folks, that was just with Tim Ord of the Ord Oracle. We're going to be right back for a short segment, and then we'll wrap up the day.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hey, welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. This is the Tom O'Brien Show. We were just joined by Tim Ord of the Ord Oracle. Now, strongly recommend checking out his site. It's very good stuff. And then I also want to say, too, when we go over to Services tab here, this is on TFNN.com, Collections Services. We have two really fantastic webinars by Tim Ord. You know, if you're listening to what he's saying when he's on the show and you're liking what he's saying, but you're trying to really grasp everything he's talking about and all his indicators, because he's been doing this for so long, right? And he just knows these kind of things. It's fantastic. If you want to get hip to it as well, I really recommend checking out these. Like, he even brought up how he was able to tell that we're not really at a top right now. And he has a webinar, The Secret Science of Market Tops, which is fantastic. And then really, too, if you're just getting into it and want to, you know, kind of wrap your mind around some of these fundamental indicators here, this is really going to be the one for you. This is 6 secret ratios every trader should know. So basically, you just go on there, check it out. We're going to give you an access code, and you just access it from your TFNN account. It is as easy as that. And yeah, it's pretty fantastic. So I strongly recommend checking that out. We only have a short little segment right now, about 1 minute. I want to say something that's interesting, especially if you have younger people in your family, maybe some kids or grandkids who are getting out of college, and you want to better empathize or understand at least what they're going through, right, when they're kind of getting out of college. This is insane. Okay, this is a ton of job postings might actually be fake, and I have heard things similar from people who were hiring managers, believe it or not. So a new survey found that almost 40% of companies posted a fake job listing this year, and 85% of those companies interviewed candidates for fake jobs. Now, this is due to a bunch of different things, right? One of the main things I was seeing for these arguments for these kind of ghost positions is that they're so tight on labor right now, but they can't afford to add anyone else. So as a way to try to increase morale, they do this kind of thing, which is really fascinating. Folks, thank you so much for joining me. Tom will be back tomorrow. I'll be with you through the rest of the week next week. Safe 4th of July. I hope you all have a great rest of your day.